Okay, good afternoon, everyone. Welcome to the 10-Minute Trades Pro Trade Room Plus. We're here for FOMC, the meeting minutes. My name is Lee Goldstein. I'm the trading director at 10-Minute Trades. Please remember all the trades we discuss are for educational purposes, so trade carefully, please. And don't forget about our Trade Live Challenge coming up, www.tradelivechallenge.com. Okay, and also, we are streaming this. So give me 1 second to get myself over to YouTube like I'm supposed to. Bear with me here. This is a fun report. All right, FOMC meeting minutes. So let me see if I can see our stream. There we go. All right. Okay. FOMC meeting minutes. This has been a very interesting event. We have had a variety of different setups because it's been a very inconsistent event to trade. So let me go over what we've got for today. Let's look at the DMM because it has some notes on it. The DMM is our daily trade report. It came out yesterday. And that's the idea with our daily trade report. It's supposed to come out. It's definitely supposed to come out the day before the event. Okay. Now, we've gone to the trap trade on the ES, and it really has been testing well. Last month, if you want to be honest, I didn't trade it well last month. My charts were all scrunched up. We got filled early also, which is very unnerving. In other words, we got filled before the news was released by about 2 seconds. Because this trade is so volatile, which works for a trap trade, that allows the volatility allows the trap trade to work because the price goes up and down. So it's unusual to get filled early, but it doesn't always ruin a trap trade. But I did extra testing to go over what time we might want to put our orders on the chart. And if you don't want to get filled early, we have to put our orders on the chart very, very close to the event, just like if we were trading a breakout trade, just that we're putting our orders on the chart earlier than we normally would. The history of the trap trade is an interesting history because if you go back years ago when we first started doing the trap trade, we traded it completely differently. We would put our orders on the chart 45 seconds sometimes. The norm was 45 seconds before the event. And we had a whole different methodology of trading the event. We had a different adjust button, not the adjust button that some of you know in our earnings trades, but what we call the trap trade adjust button. But the markets are so much more volatile these days that it's almost impossible to put trades on and put your orders on the charts 45 seconds before an event because sometimes there's so much movement before the event that you'd get filled well before the news comes out. So we've changed our methodology for the way we do the trap trades. And if you notice on the DMM, it's called prep seconds. And I'm actually going to change that today to 1 second. Because if you traded with us last month, we got filled 2 seconds before the event. So we could have adjusted our preparation orders to 1 second. I'd prefer not to get filled early. It's best because you do all your testing, obviously, based on not getting filled early. Getting filled early makes things much more random. And we don't like random. We like tested, tested and tried. We don't generally trade random. That's not what we do. Random is more discretionary, right? We're trading based on testing of previous events and how they moved. So, for instance, I spend a lot of my time. So, you understand the way we do this. Chantal works for us. We get together, usually Sunday, and we go over all the trades for the week, all the trades that we need to do extra testing on, trades that might need a tweak to the DMM, maybe trades that didn't perform well recently, maybe trades that I think we should take a look at that we haven't been trading. So we spend a lot of time on a Sunday going over all those setups, all those events, looking at the way they moved, how many ticks they moved, and what would be safe. That's how we come up with a trap trade setup. If a trade has moved a maximum of 30 ticks, for instance, over its past 6 months of trades, then think about it. If your move is 30 ticks, then you're going to create a trap trade based around tiers that might have a maximum of, maybe, depending what you're trading, it might be 45 ticks. You might go higher. You might go a little lower. In other words, if you have a trade that's only moved 30 ticks in the past 6 months, your second tier should be either a little bit under 30 ticks or a little bit over. But also, you've got to think about how volatile is the market, what's going on in the news that week that you're trading it. Is there any other report trading with the report? If you think about PPI, the recent PPI traded with US retail, and it created a very outsized move in the gold index. And that took us by surprise, even though we had increased our tiers. So the testing, we don't just randomly come up with these tiers. The tiers are based on testing how much a trade has been moving that particular instrument over the past as many months as we can test. Sometimes we'll test a year's worth of trades. Sometimes we'll go back further. Sometimes we can come up with a trap trade that's been safe for longer than a year with the current settings. That's hard because the markets have been so different. If you look back a year ago and look back the way the market's moving today, you can understand why a trap trade from a year ago might be nothing like a trap trade today, the settings. So just to give you an idea, let me see if I have a test of last month with that, which I do. Let me find the right video. Give me 1 second. So last month, I tested the trap with a different preparation, 1 second. So we did not get filled early. And because of that, it took its time getting filled. Let me start from the beginning. That was a little bit confusing. Hang on. So this is the clock we're watching. Orders go on the chart. 2 o'clock goes by, no fill. Then the price shoots down and it fills. And it only filled one tier. And that's okay if you only get filled on one tier. There is a button in the trap trade strategy, cancel the outer tier. In this case, you'd press the cancel outer tier button because you're far away from getting filled on that second order. So last month, had I not traded it poorly, it would have been a very nice winner. Nevertheless, we had a small winner last month, but it could have been a lot better. And then the previous report, it filled 2 tiers, it burst up, pulled back down, and offered a very, very good opportunity for profit. So the testing on the trap trades, it has been good with our new setup. Last month was the first time we traded the trap trade setup, and it was a small profit. It was a small profit. So let me set up my trade first, then I'll play some more recordings. The way that I'm going to trade it, I'm going to make one change to the setup. I'm trading the ES. I do want to make it clear that this is a fast-moving, potentially very volatile trade, okay? And it could bounce up and down quite a bit. It really could. So I'm going to click on strategies. I'm going to put on a trap trade. I'm going to load my template. FOMC minutes, 25:34. That's my setup. So I've got a stop of 20, and I've got a tier 1 of 25 ticks, a tier 2 of 34, tier 2 of 34. Time of the event is 1400, and I have an activation prep of 1 second. And then I'm going to label it ES trap. And that's my setup. Okay. 25 and 34. Tier 1 is 25. Tier 2 is 34. Time of the event is 14:00:00. There are no higher margins on this event, Caesar. It's normal margins. Not to my knowledge. We can check, but it's not on their calendar. It's not on the margin calendar. And that's my setup. So stop of 20, tiers of 25 and 34. I'm also just watching. I'm trying to debate if I wanted to keep an eye on gold or bonds. Tempted to watch bonds. Just on my other chart. And I want to check our time sync. What time? Make sure our computer's in sync. Clicking on time is. Going to the website time.is to make sure I'm in sync. And if you're a NinjaTrader customer and you want to check that your margins should be okay, you can go to the NinjaTrader margin page. And that information, there is a document in the trade room, in the room drive, in the trade room, but I'll go there for a minute. the NinjaTrader order desk margin updates. When you go to their margin update page, you can go to their trade desk calendar on the left, and you'll notice the FOMC meeting is on the chart, but not the minutes. No minutes. The next big report, they don't have anything on the chart right now as a high margin event at the moment. PPI was the last report that was high margin. I think the whole concept of the high margin reports, I mean, I understand why they're doing it, but I don't really care for it. It just confuses a lot of the events. Fortunately, there's not that many of them. So the idea with a trap trade is when the market goes down, we are buying. When the market goes up, we are selling. So it's a reversal type trade. This trade tended to work if you can be a little bit patient. It's hard to be patient because it's a very volatile, very quick moving event. So you'll notice the orders go on the chart. And I'll show you. So this was last month. I'll show it one more time. The price goes down, it fills one contract, and then it does a pretty significant reversal. And then it changes direction a little bit. Then I pressed, if you notice, at the top, I'll show you on another screen, but I pressed the cancel outer tier button, and then the price went up, and it was a nice reversal. When you get a move in your direction, there's a button called the cancel button that cancels the outer tier. Because think of it this way, our trade is putting two orders on the chart, and we call them tiers. So you have tier 1 and tier 2. Sometimes you'll get filled on tier 1 and the price will completely reverse, so you want to take your profit, so you can cancel tier 1 so you can move your stop and the tier won't be in the way. See, the price has changed direction, so you can cancel the extra tier, which would have been another buy order if price was still below the entry. At this point, it looks like it's making its reversal. So that's why you could cancel the outer tier. And especially as it keeps moving up, right in that area, you definitely want to be canceled there. Okay. Then in November, price shoots up. So we're now short two orders, right? Okay, see, I see it. We're short two orders. And you have a very nice reversal taking place. So you can move your stop. I moved it a little bit tight, but I was just replaying. And then that was January. I think I have a couple of other tests I did. I went a little bit further back. August. This was August. August, it shoots up, fills one tier, hangs around, fills the second tier, and then it changes direction, starts to. I moved up my targets. It was hanging around sort of bingo. Then it kind of changed direction finally, more strongly. And then October, when you hit the cancel button only cancels the outer tier. That's all it does, Frank. It just takes the order off the chart so it's not in the way. If it's not getting filled, it would be in the way of the stop. See? This trade only filled one tier, and that extra order is still there. You could either just click the X also if you want. That'll cancel it too. So you can click the X on the order, which cancels it, removes it from the chart also. Then if you go profitable, you can move your stop. Otherwise, the order will be in the way. Okay. So eventually the price goes down, move the stop. That was a small one. Depending how you wait, how long you can bear to wait also has a big bearing on this event. I think I have one more I can show us. Nope, I think I just went as far as August. Let me look at the other video. Four and 11. Bear with me here. Yes, I went as far as October. The last one I tested was October. So when you cancel that outer tier, see right now the tier's in the way of the stop. Price has reversed. You want to move the stop. If you want to move the stop down, you could click the X button or you could click the cancel button. So let me go over the setup one more time. I'm going to put my welcome screen on because I did not have my mic on when I introduced the trade. So welcome everyone. Welcome everyone to the 10-Minute Trades Pro Trade Room Plus, the FOMC meeting minutes. My name is Lee Goldstein, Trading Director for 10-Minute Trades. Remember, please, all trades are for educational purposes. It's possible to lose money trading futures, so trade carefully. And then don't forget about our Trade Live Challenge, www.tradelivechallenge.com. Okay. Our setup, one more time. So I've got a tier of 25 ticks, a tier of 34 ticks, a 20 tick stop. The time of the event is 1400, 1400. 1 second activation time because we got filled early last month. And the testing is very good with that activation. So it's sort of like we know this can be volatile. So that puts the orders on the chart right before the news comes out. And the minutes, sometimes I think the reason the minutes are volatile is because it's a report also. Not only is it inflationary, but all the data isn't released. It can't be absorbed in 1 second. So I have a question on YouTube from Marianne. So on a tier, you go out 21 to 25 ticks. I'm choosing 25 ticks, Marianne, and it is a buy when the market moves down. Correct. Correct. So what we're looking for is movement up and down. That's what I anticipate, as you've seen on so many of the previous setups, previous events. And yes, Frank, account warnings should be disabled. If they're not disabled, when you try to trade, it'll ask you if you're trading live, do you want to trade live money? So account warnings are disabled. Okay. If you know you're trading live, make sure your charts are on live and you're set, and you can turn off your account warnings. So last month, here's what happened to me when we traded it. I had my charts way too scrunched up together, and I got filled early. Watch the clock here. 2 seconds before the news was released, I got filled. So the news was not out and I was already filled. I do not usually really enjoy being filled early. I was in a profit. So I hit the close button, got out of the trade. It then went down and it would have survived the stop, and then it went up. It would have been a big winner had I stayed in. It was a very big winner. So I'll make sure. I don't think I'll get filled early because we're going to put the orders on the chart 1 second before the news. So we should not have an issue of getting filled early today. But on some trades, even if you get filled early, I think you should not necessarily rush out to get out. And I think that bank oriented trades are trades that if you get filled early, you could probably survive if you stay in because there's a lot of movement in these types of trades. The buttons on top, you have a break even button. If you're in profit, if you're in profit and you press the break even button, your stop will go to break even. The prep time is 1 second, correct, Caesar? The close button closes the trade. The adjust button we're not currently using because the adjust button is when we used to adjust our orders in the old days when we used to put the orders on 40 seconds in advance. Now we don't have time to adjust our orders. So you don't have to worry about adjusting orders. Cancel the outer tier. That's something we sometimes do. If we get a one tier fill and just the inner tier gets filled and the price reverses, I'll announce it. I'll say I'm canceling the outer tier. You could press the button or you could press the X on the chart also. And then the combine button, make sure that your chart is spread wide enough so that you can see the combine button, okay? The combine button is the same button that we use in our breakout trades. If you have multiple orders, the combine button will combine both open orders or all your open orders into the order closest to the current price. So we've got about a minute. I wonder how many people know the have the minutes before they're released. I bet the president knows what the minutes are going to say, don't you think? So there's certainly some people that know, I would think. It's just like a jobs report. You think the president probably knows the jobs report numbers before they come out. All right, so we're just watching. So there's our orders. Now I'm going to give it a little bit of time to fill. I'm going to cancel my outer tier and try and catch this downward move. Okay, so I didn't catch, I caught a $245 move. I mean, I don't think I traded that improperly. And we'll watch the video. We caught, look, maybe it's going to continue down for a bigger move. I think it might. I told you it was going to be a very volatile trade. I'm definitely, of course, now I'm sorry. But let's watch it for a minute and then we'll watch the video. It filled only one tier, which is not unusual. See, now it's back above where I got out. But you did have an opportunity to catch a second pull down. And bingo. Again, I'm going to try in the future to be more patient if I can. I took a quick 250, probably rushed my way out. It's always wild. This trade is always wild. But I could have, honestly, it could have been $1,000 trade. So that aggravates me. I'm not unhappy I made 245, but by being more patient, you can make more money. Being more patient, especially because now it's dropping. It's still nothing wrong with a 245 trade, but patience. The hardest thing in trading, in my opinion, is to be patient. I don't think there's anything harder. Not for me, anyway. We'll watch the video in a minute. Let's just watch the price action for a couple of minutes. Nice trade, Caesar. Nice trade. 200. Who else traded? Anyone else? Anyone else traded? Fred? Nice trade, Fred. Excellent. Chantal, why'd you cancel? Fred, that's like making $680 on full size. That's an awesome trade, Fred. You were very patient, I'm thinking. Nice trade. So folks that are always asking about whether you can trade micros, Fred's been trading micros for month after month, and he's doing really well with it. Weldon, no surprise there. Weldon, because this is a report that there are multiple settings. So Chantal, it's almost always a double, triple whip. Almost always. That's why that didn't worry me. I just jump out of trades too soon. It's just a bad habit. Great trade, Larry. Great trade. ZN, I wasn't watching ZN, so we'll watch it on the news, on the video. We have not tested ZN, Larry. So however you traded it, what did you trade on the ZN? A breakout, or did you trade a trap? A breakout. You're such a lunatic, man. I would not have traded the ZN on this report. Well, we didn't test it, so I mean, I wouldn't have traded it because we didn't test it. Now it's above where I exited. You could see why, but what a great trap trade, folks. This is exactly what you want to see, up and down movement on a trap trade. Let's look at the video. There was a lot of opportunity to make money, a lot of opportunity. Okay, ZN was a loser. Okay. I don't know why the heck you traded it. We didn't test it, for goodness sake. Let us test it before you trade it. We'll come up with a setting for you. I mean, it looked like ZN might have been a trap. But I want to look at the video. Let me get the video going. Hang on one second. I was comfortable that we were going to make money on this trade, but it is volatile and it is not for the squeamish. This is not a trade for if you're so squeamish. It can make you extremely more squeamish. It's that kind of trade. Let's look at the video and see what happened here. All right. Great trade, Larry. Now, the testing was good. So even though it's a volatile trade, it's worth trading. Certainly, if you're too worried about the risk, you can always trade micros. That's the beauty of micros. So here we go. There's my orders. Keeping an eye on bonds also. So bonds probably would have filled long. So we got filled short on one tier. And I moved my stop. I just got my stop too darn close. Too darn close. That's really what got me. Too close. Now it pulled all the way back to entry. Okay? All the way back to entry. So that was challenging. You had to leave your stop out of the way. You had to leave your stop out of the way. So, but the ES, if you kept your stop out of the way, offered great opportunity. And then bonds, just looking at bonds here, just to see what kind of behavior they had. They go down first, which could have been a long, okay? If you trapped it as a breakout, not a good follow through for a breakout. That's why Larry probably got stopped on that. You don't have good follow through. This is not a report that gives you good movement in just one direction. That's what the testing shows. So that's why it's a trap. And the movements are manageable on the ES. They are big swings, but manageable if your tiers are correct. And I think we've got the magic number on tiers. That's the truth. I think our setup is great. So I want to thank everybody for watching on YouTube, and hit the like button on your way out. And if you hit the notification bell, you'll know the next time we're streaming. So thanks everybody for watching us on YouTube. See you next time.